afternoon and happy Friday. Welcome to Stock Market Today. Alyssa Corum and Ed Carson here to break down the action for today and this week. We also have a battle plan for your week ahead. Given that, Ed, there was quite a bit of deterioration that we saw in the market in leading sectors this week, and the major indexes suffering some damage as well.
Yeah,
except for the NASDAQ.
Except for the NASDAQ, and it was really concentrated to a few sectors even there. Yeah, a lot of wild rotation. Definitely a lot to look at. We're going to take a look at a few stocks that are nearby points: Amazon, Snap, and Intuitive Surgical.
All right, we will do that and sprinkle in some more ETFs as well for you, just to help get a sense of what went down this week. But first, let's take a look at the major indexes, kicking things off with the S&P 500 on Thinkorswim. We have the daily chart here. The S&P closing down 1.3% for the day and undercutting its 50-day moving average in a pretty notable way.
Yeah, that was sort of ugly here. The S&P and the Russell 2000 joining the Dow. We'll take a look at them soon, but definitely weakness in this day. A lot of real economy sectors really struggled this week, and honestly, you could say that the week really began on Wednesday. I mean, yeah, the S&P hit a record high Tuesday morning, but it wasn't until the Fed meeting was announced, because it really didn't do anything. That's when things got going. The market sold off that day. NASDAQ did relatively well that day, but then you saw, it was banks rebounded on treasury yields, but miners kept falling. On Thursday, treasury yields plunged. That was good news for techs, but everything else sold off, especially the banks. And then today, pretty broad-based selling. Just was not, it was a real rotation. Sectors that were hanging on or doing well, definitely out of favor. Some other sectors coming on, but it was a rough week, even rougher than the market indexes, because of that rotation that you were talking about.
Yeah, and today marks the first close below that 50-day line for the S&P in a number of months, Ed, really since February. Even though it tested that level a couple of times, this is the first close below that line. So is there any significance to that? The fact that, we're not seeing support at the 50-day right now?
I think it is significant. And when we look at the other averages, the NASDAQ is close to a record high, and there's parts of it that are doing well, but the S&P is below its 50-day line. The Dow is now, it's undercutting a lot of levels. The Russell 2000, most of the market is sort of struggling. That's significant. It's not easy unless you were in the right stocks. This is probably a tough week for most investors.
Okay, well, let's flip on over to MarketSmith to check out the NASDAQ. As you mentioned, Ed, looking really good by comparison, which I don't think we really expected to see the NASDAQ this week take the leadership role that it had. It's been the laggard for a number of months.
It has been the laggard. The last, and now you can see from this, the relative strength line shows that the NASDAQ has been picking up ground on the S&P, but only relative recently. You can see that the general trend was down. The NASDAQ did okay. It closed down a little bit for the week, not too bad. The NASDAQ 100 actually may have been higher or was close to it. But I mean, will that last? We saw trouble when the NASDAQ was lagging and some other sectors were up. Can this one continue to do well relatively? And this was, again, it was down for the week. If holding on is nice, but if the other indexes are falling, it's hard to see the NASDAQ making up a lot of actual ground.
And the Qs closed up about 0.4% for the week. We talked about a number of large cap tech stocks on IBD Live this morning, either presenting buy points this week or just carving up the right side of bases. So interesting development there. And taking a look at various sectors, you mentioned miners getting hit particularly hard this week. So we can check in on XME, the S&P Spider Metals and Mining ETF, down a whopping 12% for the week. Heavy volume. And this mirrors a lot of the leading names in the steel and mining groups that had been leading the charge in 2021.
Yeah, and up till last week, and you can see this group was still doing pretty well. I mean, and so you have to be able to react to it. This is not a market where you can just say, well, I'm going on vacation for several weeks. Everything should be fine. Just there was a lot of breakdowns, really decisive. This is a character change. I mean, there were a couple of times when it sort of came under in some of these stocks, but they generally bounced back pretty quickly. This was the sharpest drop. Copper prices fell, a lot of commodity prices in metals. I mean, but then further afield, like corn futures, other things, a lot of these things came down. Generally, some fairly sweeping sell signals, and had a nice long run. Maybe it'll have another one, but it probably needs some time to recover. And including most of the stocks in those groups.
Mm-hmm. And where is that money flowing? Well, technology, software, so many big software movers this weekend. It was pretty impressive.
Yeah, software has really been leading for the last several weeks. There's a few names. Adobe had strong earnings this week. That had broken out like several days ago. There's a few others that had broken out maybe a week or two ago. Nice action. One issue is that a lot of them are extended now. So I mean, there's a few names like Microsoft, this is a little bit of a different story, but IGV is maybe one way you could try to play software, given that a lot of the other names, which are doing well, are not necessarily presenting buying opportunities now. So IGV really strong. Its relative strength has picked up. It's at least above these April levels coming on. This is why the NASDAQ did as well as it did generally, was software.
And you mentioned the time to buy a number of these stocks has already passed. So just another reason why it's so important to stay on top of that sector rotation. So you don't get caught flat-footed on the sell side, and you can take advantage of new opportunities where that money is rotating into.
Yeah, it's sort of like a video game where the game, as it gets more difficult, speeds up, like a Tetris. It's like this kind of market is like, it's really going fast. You have to react very quickly to avoid a kind of game over kind of situation.
Mm-hmm. And another way to play the strength could be with ARKK, the ARK Invest ETF. What a run this ETF had back in 2020, but took a huge break. I mean, Tesla, one of the big components here, but it's starting to show some signs of life.
Yeah, and the reason I'm looking, and people know me, I'm not biggest fan of ARK necessarily or Tesla, but this is bouncing back, and this is more of a play. Like if you wanted to be buying some of those beaten down stocks that are starting to rebound, and they hold a lot of stocks that were huge winners last year have come down, and that's why the ETF has come down. If you want to play them, but don't, but not sure which one is going to be the winner, pick the winner, because a lot of them may not work out. I mean, some of them, they may all work out, some may not. It's not necessarily it's a safe play, but at least it avoids a stock specific risk. If one of these stocks, it's like, oh no, it doesn't work out and it drops 20% in a day, 30% in a day, that may not be fun for ARK, but it won't hit you so hard, but it's still a way to play that. So it's an aggressive situation because this is well below old highs. So I'm not saying conservative investors, please step into this and you'll be safe, but it is a way, it's maybe a way to get into some of these highly valued names that are trying to bounce back, including a lot of software names. That's one possibility.
Mm-hmm. And your risk is pretty clearly defined at these levels with where it's trading in relation to its 10-week moving average, less than 4% above that level.
That's a good point.
All right. And let's take a look at Amazon, ticker AMZN. Had a good week, up 4.2%, climbing up the right side of a base, and now trading about 5% above its 10-week moving average. And Amazon took a very long break and is now perking back up over the last couple of weeks.
Yeah, it does have a base here because it technically hit a new high here, but yeah, the base, it goes back at least to September, sort of a consolidation, maybe even a little further back, depending how you want to look at it. But the relative strength line is already at a consolidation high. So that's nice. I mean, it's not at an all-time high, clearly, as you can see how it winded back. But so that's a positive sign heading into it. We already have Amazon Prime Day coming up on Monday. I don't know how much of a catalyst it'll be. Probably get a lot of activity. There's usually not that many good deals there, but it gets people doing it. They'll see how many people sign up for Amazon Prime. So this is one, it's been a long downtrend. We saw that with some other stocks like NVIDIA. We saw it with PayPal. Maybe this is another one. a big cap that's had a huge runs. Maybe it's ready for another one. It's not there yet, but definitely a strong performance the past couple of weeks. Some pretty big moves, and this week at least it was on higher volume. So definitely one to keep an eye on next week.
Right. And as our podcast guest this week, Larry Cordisco, pointed out, Amazon is one of those companies with a very compelling long-term growth story. I mean, you can see the forward-looking estimates here on an annual basis, up 30+%, even though revised lower maybe a little bit recently, but that's some very strong growth projected ahead as Amazon continues to expand its reach. You've got Amazon Web Services looking to get into the healthcare market, in the entertainment industry. They are just gobbling up, it seems like, different groups, and being a very powerful force in a lot of different verticals.
Yeah, it's going to have, it has an amazing future. It certainly seems to be.
All right, well, we'll see if the stock can measure up. Now let's take a look at Snap, ticker SNAP, nearing a resistance level, Ed, with that draw the line tactic that we've been talking about. You can draw across those tops in the base here, and it's getting close to that 64-65 area.
Yeah, technically it sort of had a handle here, but it hit resistance right at that line. This is that area. It just was a few cents short of this area. So, and now it technically, you could say it has another handle, at least on a daily chart, not on a weekly. Look, if it can get above this level here, 65.96, 10 cents above this April peak, that would seem to be a legitimate buy point. There is the ultimate official buy point of 73.69, but in this situation, also, if it does that, the relative strength line looks poised again to draw the line, at least get above a short-term high. On the fundamental side, revenue growth is accelerating. So there's been strength in that front. It started to turn profitable. We'll see if it can actually be profitable in 2021. The estimates are not there. So maybe people expect spending to pick up, and, they won't make money the rest of the year, but it's definitely one that's had a nice uptrend. After a couple of years of really poor performance, it is come back.
Mm-hmm. It has. Well, what about Intuitive Surgical? Let's check in on ISRG. It wasn't just tech stocks that had some fun this week. The medical sector also getting a lot of attention, and Intuitive Surgical among them, as it climbs up the right side of a cup base here. Potentially the development of a handle would be good to see, but what's your assessment of this stock, Ed?
Yeah, it's sort of a nice base on base kind of situation. Had some trouble back and forth, but look, hospitals are opening up. Their surgeries are returning. I mean, that was something that hit them last year. They actually had a reasonable year, given that, the place where everybody uses their stuff was sort of shut down to a great extent. They didn't do many surgeries last year. Growth is returning. Presumably that will have, with easy comparisons, should do well. Relative strength line is near a consolidation high. Medical products, because again, hospitals and other things, medical products, medical systems makers, some of them are definitely starting to look better. We're seeing more of those among the breakouts recently. So this is one that, definitely investors should keep an eye on going forward.
Mm-hmm. And now let's talk about our game plan for the week ahead. And it seems like net, with the selling that we saw in the leading groups this week, a number of the major indexes suffering pretty substantial technical damage, that net, it seems like selling was what investors would primarily be doing this week, maybe getting rid of some of the exposure, going a little bit more to cash.
Yeah, I mean, it seems like some situation definitely wanted to be getting out of a lot of these sectors, the miners, the financials, a lot of those things. And yeah, maybe you pick up, if you were lucky, you picked the right one, certain techs, but it's more like, 2 steps back, 1 step forward, or some kind of thing, probably reducing net exposure. And while some of these stocks that we just showed are close to buy points, they're not really there's not too many, a lot of the really hot winners are coming up. So I think that, probably thinking more in defensive mindset. And, you still should need to be staying very alert, both for selling and I think a hard look at your portfolio. If you have not really scaled back in the last week or two in some of those real economy names, take a real hard look. Now, maybe you have some lucky ones that are doing well, but chances are a lot of those names are not looking good technically anymore.
And on the buy side, that's another signal of the market health is what are the setups out there? Are there a lot of quality setups to buy? That can also be a signal for getting back in. We are seeing pockets of strength, as you mentioned, but we would want to see more setups, I think, at this point, in addition to just looking at the technical damage for the major indexes underneath the surface. What's quality or what's suspect?
Yeah, I mean, one of the issues of some of the things that are looking good, like some of these software names, a lot of them have moved out. So, almost is like you do not want to buy extended in this kind of market. It's like, oh, it's really hot. It's like, yeah, okay, like if you bought NVIDIA at the beginning of this week, you'd still be doing fine, or bought DocuSign. But in this kind of market, a sector rotation and the market looking sort of weak, I mean, some of these hot stocks could turn cold very quickly. I mean, so definitely build your watch list. I mean, tech and medicals are going to be among them there, but don't ignore other sectors. If you see some jewels that are still holding up reasonably well, or some other emerging things as they come along, not necessarily today, but tomorrow, next week, that are going along, because you want to buy into these sectors quickly. I mean, buying into DocuSign or NVIDIA as early as possible, is the way to go. Not, you can't just say, oh, that's looking great. This software is looking great. I better jump into it. I mean, aside from an ETF. So take a really go through your watch list, really refresh it. And so you'll be ready if there are buying opportunities. I wouldn't say go hog wild if they go in there, but you always want to be ready on the buy and sell side, especially in this kind of market.
Well said, Ed. Thank you all for tuning in. We'll be back with more next week. Check out IBD Live. Got some great special guests lined up for you. Investors.com/IBD Live. We'll see you there. We hope you have a great weekend. Goodbye.